The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Hey trader, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about building your playbook of best trading setups, the ones where it's easy to make money on. You make money on the days that it's easy to make money on. Why should I build a playbook? Well, one of the things that is important for traders to understand is that your job as a trader is to execute the best trading setups that are easy to make money on, not to be taking trades that are 50-50. I caught this move, I caught that move. One of the biggest challenges that retail traders face is consistency. They are unable to produce not only consistent results, but also results that are scalable in size. Which the question then remains, which setups do you make the easiest and the most amount of money on? Mindset shift from I trade XYZ every day because I'm super smart and I know how to trade that market versus trading specific easy money making setups that repeat on any market, on any instrument. Building a playbook of setups that, number one, setup A could be your 5-star all-in opportunity that repeats 2-3 times a month maybe on any instrument. And your job then is to find that opportunity if indeed it presents. And that's the opportunity that is your biggest and most scalable trade setup. That's the one that offers you the greatest risk-reward opportunity. Doesn't show up as frequently, but when it does, it offers you an all-in opportunity that repeats and is scalable in size, and it shows up on any instrument. Setup B is the one that can show up maybe 1 or 2 times a week on a basket of instruments. And again, a 90-10 opportunity, not as large of range, but a very tight risk, 3, 4, maybe 5-to-1 risk-reward opportunity. And Setup C, of course, which again can show up 1 to 2 times a week, which may offer traders a 2-to-1 opportunity. So you're looking for maybe 1 or 2, or maybe even 3 of Setup B and C. And if Setup A should present within the week, you could be looking at maybe 2 to 3 and maybe even 4 trades in the week. Now, one of the biggest challenges for traders is that, of course, they want to trade every day and they want to trade all day long in a lot of cases. If you have a basket of instruments, 5, 10, maybe if you're skilled at managing all of those, you could have up to 20 different instruments depending on the session that you're trading, just to filter through each evening or each morning, whatever your schedule is, whatever session you're trading, wherever you're located in the globe, and filtering through down to 3 or 4 that fit the criteria that may present into one of these opportunities as the week evolves. Your job is to hunt out those easy money-making trading setups that rinse and repeat, the ones that show up again and again and again on any market. Now in the playbook, we go over 3-day setups, 3-session setups, and the importance of understanding Monday's opening range and initial balance. We have a very basic model for trade entry criteria. We have essentially 3 basic models. We have breakout traders that get triggered into the markets, day 3 longs, day 3 shorts. We have a first red day signal or a first green day signal. Trigger days, inside day, can lead us into potentially a first red day or a first green day opportunity, but these are just repeatable, simple models that show up again and again and again on any instrument. Now we can just start off and take a look at the current week that we just had, and we'll look at a couple of different examples of where we had this opportunity for day 3 longs or day 3 shorts in the markets. Now, the basic understanding of the Monday, Wednesday, Friday template is this. Monday is the opening range. Tuesday typically will expand the range. Wednesday is the midpoint range of the week and a reset, heading into the backside of the week where we have a potential range reversal on a Thursday, and the closing range of the week. Now, just to clarify, this is my approach. This is how I approach things. This is the model that I use to identify my best playbook trade setups. Monday, Tuesday, Wednesday is the front side of the week. Wednesday, Thursday, Friday is the back side of the week. Wednesday is a reset day, resetting our account. Day 1, day 2, day 3, Monday, Tuesday, Wednesday. Day 1, day 2, day 3, reset at the midpoint range of the week. Next, I want to talk about closing price. Every trader, when the day starts, has this information on whatever instrument it is that they're looking at. The settlement price from yesterday's close, yesterday's closing price. And I use New York closing charts. Now, I know there's a lot of people who talk about all these other times, but all the charts close at 4:59 New York time. That is yesterday's closing price. Now, two other pieces of valuable information that we also have are yesterday's low of day or low of week level and yesterday's high of week or high of day level. Every trader has these three pieces of information when the new day starts. Now, first, let's just understand exactly what a 90-10 trading setup is and is not. A playbook trading setup will usually culminate in a well-engineered template on the day for a pump and dump trading setup or a dump and pump trading setup, depending on the instrument that you're hunting and which one fulfills the criteria that meets the best candidate on the day in the session that you're trading. So, for example, you may have an instrument that fulfills your criteria and you come to your session the next day in your timing window, and that instrument may have already moved in Asia or London or New York. Now, there could be a low-hanging fruit continuation opportunity, which we talk about in page 96 of the playbook, which is the trend continuation trade. So if the original trade moves in Asia or London and you're trading the following session, you may have a low-hanging fruit continuation of that existing trade setup, which comes back to my original statement. Are you looking to catch moves, or are you looking to trade easy money making, rinse and repeat, scalable best playbook trading setups? Let's take a look at the current week, and we'll just see which opportunities presented for traders that came right out of the playbook. Did a short video on building your daily watch list, which I'm currently completing. And in that list, I talk about just having a basket that reflects some different markets that will offer you the opportunity for 2, 3, maybe 4 best trade candidates in the week, some major currency pairs you can add to that list. I trade the US session, so this is just a basic grouping of some major currency pairs. Metals, gold and silver, the energies. We can have crude, West Texas, natural gas, and of course I look at the US indexes, Dow Jones, NASDAQ, the S&P, and the Russell 2000. So the whole point is the daily process is what will allow you to identify the best candidates on the day. So narrowing your watch list down to 2 or 3 of the best candidates that fulfill the criteria. So again, as I mentioned, you may have some on your watch list from the night before or from that day. They may have already moved in an earlier session. So therefore, that instrument is not the best one in your session. You may get it down to 1 or 2 well-engineered templates in the timing window on the day for your criteria in your session, and then execute the setup on the best one that you choose, lock in your profits, shut it down, and walk away. Review the trade later for an actionable review process. How could you have improved? If it was a winning trade, how could you have extracted more out of a winning trade or managed your risk tighter on that opportunity? Rinse and repeat again the next day. Emphasizing I'm hunting out the same high probability trading setups each day, each week as the week evolves. Monday, Wednesday, Friday. The same setups on any instrument. Not trying to trade a single market all the time. I'm looking for where the easy money is made, and if those setups show up, executing the trades, locking in the money, and walking away. I'm not interested in sitting at the screen all day, catching moves, grabbing pips, catching highs, catching lows. I'm looking for the same repeatable, easy money making trading setups. Zero emotion. They're scalable in size. They rinse and repeat. There's no analysis paralysis. There's no fear of missing out or the idea of going into tilt and then YOLO. You only live once, and just trying to catch back to the high water mark or double down on your losses or gamble. That's gambling. Fear of getting in, fear of getting out. The same trading setups over and over and over again. And then in between, doing nothing, sitting on my hands and waiting. If I don't have a best trade candidate, I don't take a trade. And Bill Lipschutz says it best. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. And another one of my favorite quotes by Jim Rogers. I just wait until there is money lying in the corner, and all I have to do is go over there and pick it up. I do nothing else in the meantime. The big challenge for most traders is that they actually can't sit on their hands and wait. They don't really have an edge in the market. They just want to trade every day and take trades, which in most cases are usually 50-50 types of market activity. They overtrade, they get emotional, they get impulsive, and they engage in irrational behavior when they get behind the keyboard. And they self-sabotage all the good results that they do get. Which is why I repeat the phrase constantly that the behavior of the trader is the number one reason that most traders will fail. Which brings us back to our first slide. Best playbook trading setups. Why you should build a playbook of your best setups. Not have to do anybody else's setups, but the ones that you resonate with best in the session that you're trading. With your mindset, your skill set, your emotional makeup, your belief system, your winning attitude, where you're currently at with your skills, but you need to build a playbook of setups where it's easy for you to make money on. Now, one of the phrases that I constantly repeat also is a quote by Paul Tudor Jones, always think of your entry point as last night's close. We talked about the 3 levels that every trader has access to. Mastering these levels will help you identify best trade candidates. On Monday, we had a market go parabolic in the Europe Open from closing price. Paul Tudor Jones, think of your entry point as last night's close. Going parabolic. So noticing the difference in the price action, a choppy market versus an explosive range expansion on day one, Monday's opening range. London proceeds to auction higher and expand the range, putting a high of day in place. A lower low on the inside, setting up for the beginning of the US window, lower low for the pump and dump parabolic reversal back to closing price on Monday, day one. We have a market that's broken out. That criteria will come up on our watch list. We have markets that are in breakout. Our basic model for trade entry criteria is met the beginning of the second hour, 9 a.m. hour, heading into our US window. First hour puts a high in place. We've worked the high. We get our engulfment, our pin hammer in the 9 a.m. So everything is timed and measured. For a parabolic reversal trade on Monday, day one, no major red news on the schedule. A 3-session setup on day one, Monday, our opening range. This also built from a 3-day setup. We had a market that broke out on Thursday, taking out Wednesday's low of day level and reversing on Friday. I've mentioned this again. I do not start a new count until a daily level on the other side is broken. The break of Thursday's high on Friday starts our day count. We have a 3-day setup heading into our Monday. Thursday's day one, the low of the week. Friday's day two. And when Monday breaks out, we have a 3-day setup for either a trend trade or a parabolic reversal trade. What type of template do we have on the day for an easy money-making trading setup? We had the reversal opportunity on Monday, the opening range in our new week. Now on Tuesday, day two, the Mexican peso was an instrument that came up on the list. We had an inside day. The inside day on page 69 in the playbook is a trigger day. That's a potential alert to an opportunity that could present in our session. It also presented as a first green day, a day that closed above the open. A first green day, typically an ideal candidate, will come after a dumping day. We had a large dumping day that closed in breakout on Friday. That brings this pair up onto our list. Pairs that close in breakout, a U.S. major cross It gave us a first green day signal. So remember the three levels. We have our high of week, high of day, low of week, low of day, and we have our closing price. When the new week begins, everything auctions from Friday's closing price. We have a market that has closed as a first green day and also broken out of the initial high of the day made in Asia. There are two types of templates on the day again, pump and dump or dump and pump. We just saw a pump and dump opportunity on gold on Monday, day one. We now have a pair that's potentially setting up for an ideal candidate on day two. Day two typically expands the range. A range expansion opportunity on Tuesday, day two. So on Tuesday, day two, we have now a candidate that could be meeting our criteria for a larger dump and pump template opportunity. This market has made a higher high just prior to the U.S. session, taking out the U.S. session highs. Now, same process applies. Basic model for trade entry criteria. Page 29 in the playbook. First hour puts a low in place. Second hour, heading into our second hour, we have our engulfment and pin hammer for an explosive day two trend continuation range expansion trade coming off of closing price and high of day levels on day two on the Mexican peso. Large dumping day on Friday that closed in breakout. An inside day that was a first green day, an ideal first green day. It broke higher through our Asian sessions and closed as a first green day, coiling sideways underneath the high of the week. Markets that coil underneath of the high of the week or on top of the low of the week are potentially preparing for an explosive move. A day two range expansion trade on the Mexican peso. The Nasdaq 100 closed in breakout on Thursday the previous week as a first red day. We had a first red day again on the close of Monday, a Monday that closed in breakout, closing as a first red day again. More importantly, we have breakout traders now in the markets and potential other time frame sellers driving this move. We then proceeded to make a lower low on Tuesday, day two. Day two typically expands the range. They've made a lower low before closing back inside of Monday's range. Lower low is the setup for a pump and dump. We have other time frame sellers driving this market. We have a first red day. Now, how does price behave on the day when we come to our session, our U.S. timing window? Paul Tudor Jones, always think of your entry point as last night's close. We have a low of the day made in the Asian session, beginning our pump back up into the high of day level. The high of day made in the U.S. session, the last peak formation high made in the U.S. session, before coming back underneath of closing price. 4:59 New York time is closing price. Our basic model for trade entry criteria is met at the New York Open. This market breaks through the low of the day, expanding the Asian range before coiling back, and our 10 a.m. club members, our third hour trade opportunity presents with a nice coil sideways for a parabolic collapse, a one bar stop, whether traders entered in and added into that position, but we had a first red day trade on day three. Day three can offer us two types of trade setups, range reversals or range expansion opportunities. A day three trend trade on the Nasdaq. We had our signal day, our first red day. We had a range expansion on day two, a lower low, setting us up for the pump and dump and our coil at closing price, a breakout trade from the Asian range, a pullback, and a third hour, a 10 a.m. continuation for the range expansion. Now, as I've talked about, 10 a.m. is not a magical number. It is the beginning of a new 4-hour cycle on oil, metals, and indexes. They start 1 hour later, 6 p.m. New York time. Therefore, their 4-hour rollover is 1 hour later than currencies. When we have our new 4-hour cycle beginning, we have other time frame traders potentially driving this move. On Wednesday, the midpoint range of the week. On Wednesday evening, we had the Canadian-Swiss pair close at the low of the week in breakout. We have day one, day two shorts in the market. potentially now setting up for an opportunity on Thursday on the backside of the week. We have a market that's now made a higher high in the beginning of the Asian session, a higher high taking out the low of day breakout level heading into our London session. So now we have an opportunity potentially setting up for traders in London who have this pair on their watch list. We're at the low of the week. We've closed in breakout. We're heading into our Europe session open. We have our basic model for trade entry criteria met. Paul Tudor Jones, think of your entry point as last night's close. We're at the low of the week in breakout, and we have an opportunity now on the backside of the week for a scalable parabolic reversal opportunity in our Europe-London window. Understanding most importantly that we have breakout traders in the market. Other time frames are now in the markets. And there are two things to think about. Number one, most breakouts fail, and the trend is your friend. We have a situation now where the market is setting up in a well-engineered template for a parabolic reversal trade. Now, we're not going to go too in depth with this, but we talk about this in several videos about building your muscle memory and your understanding of what a playbook best trade setup is. For traders who had this on their watch list, this was a scalable opportunity for a low of the week to high of the week parabolic reversal trade, a market that gave a low-hanging fruit continuation trade in the US window all the way back to the high of the week. We're on the backside of the week. We have a market that closed at the low of the week in breakout. How does price behave on the day when we get there? In our Europe-London window, we had a parabolic reversal trade opportunity on the backside of the week. We had day one, day two breakout traders in the market, and on Thursday, day three triggers the low of the week, triggering other time frame traders into the markets before reversing and exploding back up to the high of the week. Now for US session traders on Thursday, we had a market, the Aussie dollar, that broke out of the high of the week, similar to what we saw in gold on Monday's day one, the opening range. Rinse and repeat, scale it up in size. The same type of opportunity that we saw in gold. The market breaks out, London puts in the high of day level. We had major red news at 8:30 on the US calendar. That market pinned and engulfed. This is a 5-minute chart. Our universal entry criteria is met after major red news. We have our high of day potentially now locked in place, a 1-bar stop for a reversal trade back to closing price. Now, just to demonstrate a very simple, repeatable trading setup, breakout, consolidation, reversal at the high of the week on Thursday, day two on the backside of the week. Now that also set us up for an opportunity on Free Cash Friday on the backside, the closing range of the week. Thursday's closing price was actually outside of our opening range. Outside of our opening range, closing and breakout. Monday put a low of week in place. Tuesday expanded the range, made a lower low, proceeded to make a higher close, a close back inside of our range. So we now have a high close and a low close. Thursday broke out, pulled back inside and closed at the high of the week, slightly in breakout outside of the opening range. Wednesday's high of day level now may potentially act as a ceiling heading into our Friday on Free Cash Friday. How does price behave on the day when we get there? Now, most importantly, how does price behave on the day when we get there? We now have a market that's closed outside of the opening range. There are two types of trade setups that I look for in terms of a well-engineered chart on Friday. We're either going to have an opportunity on a pair that's set up for a parabolic trend continuation trade or a parabolic reversal trade on a well-engineered template on the day. Paul Tudor Jones, think of your entry point as last night's close. We had major red news. Now, as I've spoke about on the backside of the week, news can act as a catalyst to complete a move. Now we have our market, we have our basic model for trade entry criteria, we have our other time frame traders in the markets. We have an opportunity after the news is released to enter into this market. Now, for traders who are savvy to this setup, they know in that first minute there's an opportunity now to be entering into this market with a starter. We break the low of day level. Our third hour begins, our 10 a.m. hour begins after the New York Open, pumping back up into the breakout level of the Asian session for the continuation trade back to the low of the week. We have an opportunity from closing price to low of week on the backside of the week on the Aussie dollar in a market that closed in breakout. A day 3-day setup for a 3-session setup, completing the closing range of the week for high of week to low of week opportunity on the Aussie dollar. West Texas Oil gave traders an absolutely fantastic 5-star opportunity on Free Cash Friday. Monday, our opening range expanded the range, closing in breakout before reversing and closing as an inside day and a first red day on Tuesday, day 2. Wednesday, our midpoint range of the week made lower lows, triggering breakout traders from our inside day, signal day, trigger day. So we have a first red day. We've got breakout traders in the market now. This is an example of where Monday, a day 1 runner, established the range. Tuesday's an inside day. Tuesday, day 2, typically expands the range. In this particular case, Monday's our day 1 runner. We have a market that's in breakout from Friday. Friday breaks out, continues on Monday, day 1, reverses in a first red day. We have breakout traders triggered short into the market on Wednesday, our midpoint range of the week, lower lows, and then a close in breakout heading into Friday, Free Cash Friday. The market closes outside of Wednesday's midpoint range of the week. Now heading into our U.S. session, we have a market that's come up on our list. It's closed in breakout. We've made lower lows on Wednesday, day 3. We may now have a potential 3-day setup. It's closed in breakout. How does price behave on the day when we get there? The market breaks down and makes lower lows prior to our U.S. Open, our 9 a.m. open on oil. Now, importantly, the thesis always is, do we have one of our extremes locked in place? Do we have the high of the day potentially locked in place? Lower lows. We have a lower low made on Wednesday, a larger 3-day pump and dump opportunity. What does price do on the day? Our universal model for basic entry criteria sets us up for a pump and dump off closing price heading into our 9 a.m. hour for an explosive parabolic collapse that's scalable in size. Several traders hit this opportunity, a fantastic way to end the week on a Friday heading into a Labor Day weekend for a parabolic explosion. So again, differentiating movement with an actual trading setup where it's easy to make money on. Free Cash Friday, a parabolic reversal trade and a larger time frame trend continuation trade from the breakout of the inside day on Wednesday, our midpoint range of the week. So in closing, I want to reinforce the importance to traders of building your playbook of best trading setups. Build your muscle memory on those setups. Know them intuitively. Know how to hunt them out. Know how to find those instruments with a watch list each day. Hindsight pays. Predicting, chasing movement, all of these other things are crazy. They're not reproducible. Master 1 or 2 setups that repeat on any instrument. Find them. Develop the process, a daily process, to find 1 or 2 of those and maybe a third larger scalable opportunity in the week itself. Rinse and repeat, scale them up in size. Chasing movement is what blows out trading accounts, puts traders into tilt, and causes them to engage in self-sabotaging, emotional, irrational, and impulsive behavior. Build your best playbook trading setups. Master them. Rinse and repeat. Scale them up in size. Have a great day, traders, and may the markets go with you.